Good evening. Today, we have Jasper. We're very honored to have Jasper with us today. And before we start, I'll give you a quick introduction. Our topic today is how to gain a financial advantage when upgrading your property. So if you're looking to upgrade your property or looking to buy a new property, this is definitely for you. Okay, so I will be introducing Jasper. He's in his late 30s. He's a father of two boys, age 5 and 9. So after secondary school, he did NS. And after that, he actually took on a high-risk job as a commercial diver. He learned the importance of saving for rainy days, especially when he's doing such a high-risk job. At that time, his take-home pay was on the average about $800 as a trainee diver. And he had insurance premium of $200+. So at that time, cash was tight. And he got married in 2011, bought his first HDB through his property agent. And then he was working 15, 16 hours a day, earning about $12,000 on average. So every day he would actually climb a 30-story ladder without harness. He works 3 kilometers from home, and because of the super long working hours, and he even had to do video calls to watch his son growing up. Then in 2015, the construction industry was actually sunsetting. What happened? He had a 50% pay cut, retrenchment, and then his second son was born. HDB prices across Singapore was dropping about $100,000. So his HDB value actually dropped by 6 figures, and it was starting to age. So at that time, he went into the real estate industry to find a solution for his own housing situation. So now, knowing what he knows, he realized that he actually had many other different housing options, ranging from ECs, even condominiums, and no one told him about that. He was never informed about that he could actually look at these other options, and these other options would have saved him from financial heartache. So now he's on a mission to make sure that others don't make the same mistakes as he did when he bought his property. He owned his first investment property in 2018 and is consistently the top 10% producer in TopNext, which is the largest estate agency in Singapore. His specialty is actually on residential, both HDB as well as private property, and his main clientele are first-time homeowners and upgraders. Besides housing options and doing risk analysis, he's also very good in and specializes in wealth creation through strategic home ownership and wealth protection through holistic planning. So he doesn't just look at property, he will share a bit more in a bit. So without further ado, I would like to welcome Jasper.
Hey, hi Jamie. Hey, thanks for the wonderful introduction. Hi everyone, thanks for joining us today.
Hey, thanks Jasper, thanks for coming online with us today to share about your great knowledge on buying a first property or upgrading your property. So to start off, I'm going to kickstart with the first question. So
Okay.
why did you go into the real estate business?
Just now as Jamie was mentioning, right, I was formerly from the construction industry. So in 2015, it was the sunset for my industry. This means is that, 50% pay cut plus retrenchment. It was like, wow. And yeah, so it was bad. So I was looking back at the HDB that I bought back then, and I realized that the value has dropped by almost 20%. That was about 120,000. So I had a shock because I bought a HDB like many others, and I trust that I will actually stay in it forever. And this is something I rely on during my retirement days. But with this massive drop in value, right, I got really worried. It is supposed to be an asset when I bought into it, but now it appears that it's not. And I'm also facing a retrenchment anytime soon. So like the saying goes, right? If I cannot beat them, I will join them. So here I am. I picked myself up where I fell. So today I'm actually on a mission to be sharing and reaching the same message to many others so as to avoid the same painful situation that I went through myself before. Yeah.
Thanks, Jasper. Just thanks for being so candid and sharing your life story with us. I also, so, when someone is looking to upgrade or to buy, so how should they start? How should someone start? What key features should a homeowner look at when they are thinking of upgrading?
Personally, right, I will always ask my client this, start thinking along this line. What do you want your property to actually do for you when you retire? What do we really want? We could own a property that is, let's say, $500,000 in value. During retirement, we downsize to a 300,000 unit, and we have that 200,000 different, that we can use for retirement. Or we could, work our way up to a $1.5 million property, for example, downsize to the same 300,000 HDB during retirement, and we actually have that $1.2 million as a retirement fund. It's a forced saving that, we diligently save up over the years. So which is actually better? So, once we get the answer to that, right, we will actually plan and build our way together towards this common goal. So this is actually what I would actually suggest for them.
Okay, thank you. So
Yeah.
I guess you've been in property for some time. So what is the craziest or most unbelievable buy that you've come across?
One of my clients, right, he actually got a very decent HDB in a very prime area, Ang Mo Kio. Can you imagine, right? It was only like just one bus stop away from Ang Mo Kio Hub. A 3-room flat, 721 square feet, mid-floor some more, at only $250,000. That is 250,000. And back in those peak days, right, units like this will cost up to 380 or even 400,000. But today he only got it for $250,000. Yeah.
Wow, that's amazing. Was there any reason why it was like so much lower than what was outside?
Okay, the main rationale, right, that probably you also read on papers is about this issue of this decaying lease. Yeah, so this HDB being in a very mature estate, yes, it's being very mature, but at the same time, the age is also getting old. So age could be another factor that is actually going to be bringing down the property prices. Yeah.
Okay, nice. That's really interesting. I didn't know you could really get such a low, so much lower. That's really quite crazy. Okay, so what's the cash layout like for private property as compared to upgrading to a larger resale HDB? Because some people may always think that, oh, private property, is it really something that I can afford? Yeah. So what's the cash layout like between these two?
Just to clarify, right, because I met a lot of others that have this misunderstanding that private property, right, they cannot use CPF to pay. No, it's wrong. They can. Only commercial property, they cannot use CPF. But I will break down the cash outlay in terms of HDB versus a private. So for HDB, right, we can actually explore a HDB loan, which require as minimum as 10% down payment, which could be fully covered by CPF is sufficient. But what is the cons of that? Well, since 2008, right, HDB interests have been much higher than the bank interest ever since. For example, 2.6% for HDB loan versus today, right, private bank loan, we can get a fixed 1.5% for 5 years. It's about 1.1% savings. It's quite a significant amount over a long period of time. So for upgraders, right, imagine that today your first loan is actually a HDB and you take a second HDB loan. Do take note, right, due to the nature of how HDB loan is actually in place, when you take out a second HDB loan, you will actually require a much higher cash outlay from the sales proceeds of your previous flat. And for bank loan, no matter HDB or private property, all we have to do is to come up with 5% cash payment. The rest can be fully covered by CPF if there's sufficient. For example, a $1 million private property, you will need to come up 50,000 cash lah. Yeah, the rest will be able to cover by CPF, which is actually a very standard practice. Yeah.
All right. So then the next question that homeowners would then have would be like, what is my home worth? How do I find out what it's worth? Are there any other things that we need to consider? Yeah.
Okay. So let's say the difference between a HDB and a private, right? For HDB, we will have to get a valuation from a third-party valuer that's actually assigned by HDB only after the option is granted. So what this means is that, right, the seller and buyer have to agree on a price. The buyer gives you a deposit. Then we submit for valuation. So in short, there is no way that you will know the valuation until you get past this step. So HDB buyers, right, usually they will just make an offer based on the recent transaction prices in the surrounding. But do take note, right, for HDB, there's also this ethnic quota restriction, which actually changes on a monthly basis. So for example, this month, right, maybe Chinese ethnic quota will not be able to buy. But being said so, right, Chinese having the largest ethnic group population in Singapore, if Chinese cannot buy, means your pool of buyers actually shrink significantly. So when that happens, right, your transaction price will actually be much lower. Yeah, which in a way, when buyer give an offer based on a low price, it doesn't really justify. It doesn't justify. But what are some of the internal attribute factors that could help to push up a slightly better valuation? Would be quality fixtures. Yeah, quality fixtures by good ID, like like HYJK, which is a Case Trust accredited interior design firm in Singapore. Because all these built-in items, right, the valuer will also take into consideration the condition, the design. When was all this being done? Because built-in, right, will actually be passed on to the next owner. So that is why all this built-in actually has a contribution factor lah. So that is for HDB. And for private property, right, it's actually very much straightforward. Before we even make an offer, we even give a deposit to the seller. We could actually, inform the banker and get a valuation to see if it match. If it doesn't even match, then probably you'll just walk away lah. But if they actually engage a more responsible salesperson, right, the salesperson will also run through some additional check on the seller's background to ensure that, the buyer's interest is being protected. It's actually very important for this step. Yeah. So for professionals, we actually subscribe to like paid data that actually provide us a more detailed information that really allow us to better understand the value that this property command before we even make any offer. Because we don't want to be overpaying, right? Yeah.
Yeah. Okay. So in a sense, basically, like so you mentioned about the seller, you having more data. Is that why people shouldn't be selling on their own, or what should people look out for if, let's say, if they sell on their own versus getting someone else to sell their property for them?
I think that's a very interesting question because, right, technically for people who want to sell the property themselves, technically you can, yeah, because everybody is on the internet these days, and well, if you got yourself be seen, you could do it yourself, but you are just probably going to be like selling one house, right? But do take note, right, this high traffic property portals with high human traffic, they charge anything from $500 to $5,000 for one portal. So for homeowners who only have one property to sell themselves, it may not make so much of a financial sense for them to be spending that thousands of dollars just to sell one property. But of course, when it comes to selling a property, the most simple part, right, will actually be to arrange viewing appointment for prospects with some qualifying questions, to ensure that they know what this is about before they even come over, to save time for both parties lah. But that is actually very simple. But what is actually the most important step out of it is actually taking place during the negotiation part at a later stage. Because you see, right, every seller always want to sell at the highest price. Standard, right? What about the buyers? Surely you want to buy at the lowest price, ma? So what are some of the considerations to take into place? Yeah, to compromise, so that both parties can move on amicably. Because there's many factors coming involved other than the price. For example, the timeline. Do I need any extension? Will my funds come in time for me to purchase the next place? What if the funds doesn't come in time? Where am I going to find all the money? It could be hundreds of $1,000s that we are actually talking about. So all this element is actually very important. So as a professional salesperson, right, we're actually able to separate this emotional component, this element of focusing on just the best price. Because end of the day, today I give you the best price that you really wanted, but I may need the unit very early, and you may need some time extension. So you may be a parent of 2 to 3 kids, and you know, if there's no convenience granted to you, will the additional money really be what you're really looking at? So sometimes, right, that is the part where we comes in, where we try to mitigate, and we ensure that it will be a win-win and happy situation for all parties to move on. That's the most important one. Yeah.
Thank you. And so with that, what's the greatest mistakes people make when selecting a residential property?
Wow. I think that's probably going to be emotions. Yeah. You see, when we are going to be buying a home to stay, we are entering like the next phase in life. So naturally, like, you know, we will be very excited. You know, today we found a dream location, young newlywed going to get married, you know, finally, yeah, they feel like adult. The best location, the best size, they got the best pricing, they renovate it extensively, you know, thinking that they want to stay in it forever. But did we really sit down first to really understand what are the options that, various options that we have? That is including me when I bought my first HDB back then. Not that I don't have my options, but my agent didn't tell me. So as a result, right, when I actually move on from this HDB that caused me that kind of losses, right, things got more challenging because it was losses. If that was profit, right, life would be actually be made easier. So there's many considerations, like let's say our stage in life, because reality is that at different stage of our life, right, we have different priority, we have different housing needs. For example, maybe your children's education. Yeah, wow, my son, yeah, he wants to study in Raffles, for example. I may want to stay in Bishan because within 1 kilometer. So how can we, relook into our and explore and evaluate our current situation, so that when such situation occurs in the future, we are able to better react. So by spending some time, maybe a quick 45 minutes or 1 hour to sit down to really look through all this with a professional that can give a better advice, right? You're actually able to take it in a more holistic manner and make the best out of your situation, whatever the situation arises. Of course, everyone got different unique situation, but all we can do is, you know, we make the best out of it rather than we enter blindly, like myself in the past. Yeah.
Nice. And so I'm sure you've met a lot of different people from all walks of life in your world. So what's the most heartwarming thing someone has done for you, or owner that you've met, or a client? Yeah.
I remember this client of mine that is actually referred by an ex-client of mine. So they're actually a very harmonious, very heartwarming family. You know, the 3 generations stays together, the in-law, the daughter-in-law, and the grandchildren. So every time I went to their place, right, I could really sense their family warmth. And there's so many occasions that I was actually talking with them late till, like, 10 p.m., 11 p.m., those kind of things. And they know that I didn't have dinner. Yeah, so they actually prepared extra food for me while I was meeting them. So that is really a gesture that it really warms my heart. Yeah.
Oh, that's nice. So so there is free lunch, or rather
Dinner.
for dinner in your case. All right. So now something more related to the pandemic. How would someone know if the timing is right? Should people be upgrading now, or should they wait till the dust settles after the COVID-19 pandemic?
This is actually like, one of the most commonly asked questions among my friends and my clients, because I always share with them this exact same thing. What is the best timing? What is the right timing? To me personally, right, it is always about our own timing. For example, you know, like for example, property is very illocatable. That means, right, it could take months for you to cash out from it. So rather than timing the market, right, how about timing ourselves? Because, right, let's say there is this property that is 200,000 below the bank valuation, but you maybe get retrenchment anytime soon. Will you dare to commit to it? So does the right timing works better, or our timing works better? So generally, right, how I actually share with my clients is that I'll give them a property purchase guideline. So long as they actually meet about 80% of all these guidelines, right, I'm very confident that they are actually in a very safe position to move on. And should people upgrade now? I'm sure most people will actually expect, property agent surely will say, yes lah, never a better time. Faster sell and buy a condo, 卖图了. Yeah, it's very normal. And I believe, right, when you're sitting behind the screen, you're probably laughing at this statement. But if you're not thinking like that, right, I'll actually be out of job. But that's actually not the main point. It's just a joke. What I really wanted to ask is that, have you ever thought, before you even have upgrading thoughts, can I ask, what is the purpose? What is that motivation, your objective that you want to achieve with this move? This is very important. Is it because purely of a better lifestyle? You want to enjoy the facilities, or you just feel a bit more atas with a private property title? Or is the purpose, right, mainly to grow a wealth strategically and to help build up your retirement fund at the same time? I'm sure once we know the answer to this, then we will know the answer, should we upgrade now? Yeah, it's actually very simple as that.
Oh, so that's quite interesting. You actually have a process and like guidelines to help a homeowner understand. Yeah, I didn't know about that you had actually had that all in place, and maybe you can share a bit about that. And also, you did mention, I understand that you do a very holistic view, not just property.
Yeah.
You bring in retirement planning and financial planning into it. Maybe you can share a bit on your expertise.
Okay, you see, right, it's like after everybody, let's say they bought a property, people bought a HDB, they'll usually get a HPS, a home protection, mandatory by CPF to cover your outstanding loan. So if you get a bank loan, the bank doesn't necessarily make you buy this mortgage insurance. But how can we better leverage on all this insurance, for example? And when I'm saying so, right, it doesn't mean you have to spend a lot more money. No. In fact, you could even save a little bit of money with the right product. Because ultimately, right, for example, me, myself, I'm a father of two. My boys is aged 5 and 9. Today, if I met an unfortunate incident and I'm gone, yes, the property is fully paid, they can stay in it. But what about the running costs? The utility service you're going to pay every month, the food on the table. A fully paid property will only give them a roof, but you need a running cost to sustain it. So how can we use a more effective manner to actually leverage and transfer the risk? Anyway, you already got HPS, you already got mortgage insurance. So technically, you're not going to buy anything extra, but you're just going to select the more efficient product to actually transfer your risk away. And once you actually have all this in place, right, you actually have assets. Yeah, you have assets. So what happens if, let's say tomorrow I'm gone? Who's going to help me handle my assets? But of course, saying all this, right, it doesn't mean I represent any of this financial industry or estate planning industry. No, I'm only sharing based on what I've done for myself, based on the experience that I've accumulated after talking to so many people from different walks of life. And this will be the exact essence that I'll be sharing with you that I apply on myself for your reference. Yeah.
Well, interesting. Well, I should have like met you 5 years ago when we were looking to buy our property. We had no idea at all. We're just bumbling around and just scrolling through online, looking at the prices and yeah. So we never had all this kind of financial advice, but I'm really glad there's people like you around that would really, I think this is really helpful. And definitely I'll look for you for my next my next property.
Thank you.
So what do you think the property market will be like in say the next 5-10 years?
Hmm. Okay, I think this is something that many people will want an answer to that. Yeah, thank you for asking that. I would say that I will not be able to have a crystal ball to predict the future, but what I does is that I take reference on the past 20 to 30 years, the property price trend that happened before. They have always been up, they have always been down at the same time. But what I noticed is that, right, the new high price, the peak, is always higher than the previous peak. And even the previous low point is still always higher than the previous low. So what history has actually taught me is that, right, because of rising land costs or because of inflation, things have just gotten more and more expensive. And comparing to, let's say, the last financial crisis, things have been very, very different. In the past, right, we actually call this a speculative market. But the government, right, has actually tamed it down into a control market today with all these various cooling measures in place. So how do we know that this is actually true? Back in the old days, down payment could be as low as 10%, that low. Today, 25% minimally. No joke. Yeah. And no matter how much you earn, right, you may be earning, let's say, 10, 20, 30,000 a month, for example. It doesn't mean that you can get an endless loan. Because, right, under the MAS regulation, they actually have a structure of total debt servicing ratio, which means no matter how much you earn, including your car loan, credit card, any loans, including your housing loan, your ratio, right, of all this negativity cannot exceed 60% of your gross income. For example, if your car loan fills up 30% of your income ratio, that means, right, your mortgage ratio automatically comes down. Yeah. So government actually has all these steps in place to regulate it. And I'm very confident that this is what I've been noticing is that the government is keeping a very, very close watch on this entire market movement. So that, Singapore, we don't have natural resources like oil and gas. We don't have gold, we don't have anything. We have very limited piece of land. So land is actually one of our greatest asset, limited greatest asset, I would say. So the government has really ensured that, we don't have like any housing bubble like what the US has went through. Yeah, because when that happens, right, foreign investor will not actually be keen to relocate and shift their money to Singapore. So as a result, because of what the government have done, I'm actually feeling very optimistic about the Singapore property prices in the future. Rising land costs, inflation, irregardless of economy, inflation always will arrive. So, well, I think in Singapore, we probably have not seen anything that have gone cheaper, right? Maybe our salary.
Yes, for sure. I guess. Well, thank you for the very in-depth explanation, and thank you for sharing all your knowledge with us today. Really glad to have you on board and to have met a real estate expert like yourself, because you're few and far between. As I said, when we were shopping for property, we never met someone like you who would actually really help to plan the financials. So I think that's quite amazing, which is why we invited you today, and thank you for being with us today. And also thank you to the audience for listening in. We hope that you have learned something. So this is Jasper Lei once again. So if you want to contact him, his phone number is on the screen. So you can reach out to Jasper if, let's say, you have more questions or you're looking to upgrade or purchase your first property. Okay, so with that, we will end the interview. Thank you, Jasper.
Thank you, Jamie, and I thank all of you for spending your last half an hour with us. With that, we look forward to entering phase 2 tomorrow. Stay safe. See you. Bye.